Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the first bullish scenario where we have a 5-wave impulsive structure to the upside, currently working on this yellow wave 3 with the internal green count 1, 2, 3, 4, 5. Common target for your wave 4 is the 382 to the 05 area, taken from the low of 2 to the high of 3, 57.6k to 53.3k, and the invalidation of this scenario is 49.3k. The second bullish scenario is a scenario where your wave 3 is already finished, 1, 2, 3, 4, 5. The common target for your wave 4 here is the 0.236 to the 0.5 Fibonacci, taken from the low of 2 to the high of your wave 3, giving you a target between 57.2k and 42.8k. The invalidation for this scenario is 37.7k. Now preferably, however, we don't move below the value area high that I have on my chart at 49.5k. That would increase the probabilities for more bearish scenarios as well. Now this volume profile, or at least the lines that you see, are taken from a volume profile of this range over here, and as you can see have been very nicely respected. The value area low in confluence with a important support resistance area, acting as resistance, eventually price moving into the volume area to the point of control, value area high, point of control retest, and continuation to the upside. Moving back below the value area high at 49.5k and retest the value area high from the inside increases the probabilities to move to the point of control at 38.7k. For now, however, this area is an important area of support on the chart. On the weekly time frame, price is now also flirting with this channel once again. This channel is taken from this low to this low here to the first time touching 30k, and you can see it's also here nicely respected, moving to the upside, ranging on top of the midline, higher end of the channel, midline once again, and then eventually breaking out, testing the high of this channel once again, but now we're moving into the channel. If the week is closing inside this channel, the probabilities do increase from a channeling perspective to move towards the midline. Finally, we also had a weekly gap here, which has been touched once with this weekly candle. So you can see the order block here, there's a red candle, a quick move up, and then the second candle having the wick here at the low, creating a gap. The gap high was hit one time. Oftentimes you see a reaction the first time you hit the gap, but now we hit the gap once again. It can of course act as resistance, but the more often you test support, the weaker it becomes, and from a gap perspective, the probabilities do slightly increase for price to fill the gap. However, what you really want to see is a candle close inside the gap. If a weekly candle can close inside this gap, the probabilities increase for price to fill the gap to the downside to 53k. Now, all in all, when we zoom into this lower time frame here, the probabilities are higher also on a weekly time frame to still continue looking for price to move towards the upside and continue the bigger trend that we have. Locally, price has touched the 886. Taken from the high to the low here, the 886 is a very rare target for a wave 2, common for a wave B or a wave X, meaning that the probabilities are higher. This move towards the downside is either a wave C or a wave Y, which increases the probabilities that price sooner or later continues the trend towards the upside and takes out the highs. Now, a couple of scenarios that I want to walk you through and explain why they are low, medium, or high probability. First of all, the triangle here on the chart, A, B, C, D, E. Probabilities low. Reasons, two reasons. First of all, wave 4 of wave C of wave A. 4 out of the 5 waves in a triangle have to be a simple zigzag structure, and if one of the waves is not a simple zigzag structure, then it has to be part of the zigzag family in either a double or triple zigzag, and an exception is that wave E by itself can be a triangle, which is incredibly rare. That means that inside this wave A we want to see a 5-3-5. Wave C has to be a 5-wave impulsive structure, but your wave 4 is over 6 times longer than wave 2, which is incredibly rare as well, lowering the probabilities that this is a wave 4. And this wave 4 also hit the 618 Fibonacci, invalidating a wave 4. Second, this wave B here can only then be labeled as a WXY double zigzag, as on some charts this high over here took the high on the left side, so a simple zigzag ABC is not allowed for then another zigzag to the downside, because wave B is never allowed to take the high, the start of your wave A. So then wave B has to be a WXY, but as mentioned, it is incredibly rare for any other wave to be a more complex structure than wave C or wave D, which is by far most common and is also mentioned in the Elliott wave principle book. So this significantly lowers the probabilities for a triangle. Second scenario is a flat. The minimum target for a flat wave B is the 0.9 Fibonacci taken from the start to the end of A, which is not touched, and therefore a flat is invalid. Bullish scenario is the low is in, and we are looking for a wave 1, 2, and 3 continuation. On some charts, the 886, however, has been hit, taken from the low to the high of 1, which significantly reduces the probabilities for this move down to be a wave 2. The 886 again is rare for 2, common for B or X, increasing the probabilities to sooner or later take this low. Always interesting to then also have the golden pocket on your chart, which is pulled from the same pivot, and as you can see, it is currently acting as resistance. Probabilities for this scenario low. Then we have the WXY here on the chart, a bigger three-wave corrective structure, after which we look for continuation to the upside, where in wave W we have a regular flat ABC, wave X is an expanding flat ABC, and then a zigzag structure in a wave Y. Common target for Y is the yellow box here on the chart, as you can see. What does impact the probabilities for this scenario negatively is your wave X, because wave X here has to be an expanding flat as mentioned, ABC. Your wave C, however, is over twice the length of A plus B, which significantly reduces the probabilities that this move to the upside is a wave C. And besides, if this is a 5-wave structure, then we have to label it 1, 2, 3, 4, 5. But on some charts, this high, like the one I have here, this high did not take the high on the left, which means we have a truncation in wave 5. 1, 2, 3, 4, and 5 not taking the high of 3, which is also incredibly rare. So it does impact the probabilities. However, this scenario would have higher probabilities compared to the previous one, so the probabilities would be medium. And then we currently have the highest probability scenario, which is the zigzag 535 leading diagonal in a wave A, corrective structure in B, and then a 5-wave move to the downside in a wave C. The probabilities for this scenario will only reduce if price can move above 66.4k. This would then increase the probabilities for the WXY scenario. The common target area for your wave C is the 1 to the 1.618 on the chart, a trend-based fib extension taken from the start to the end of A to the end of B, 54.6k to 43.9k, but the most common target area for C is the 1 to the 1.236, where the 1.236 is at a level of 50.5k. Looking at the volume profile of this range, we were at 72k, then lost the value area high, lost the point of control, and now we have lost the value area low. So there is no sign of weakness. If we want to increase probabilities for more bullish structures, we at least have to get back inside this volume profile. The value area low is at 62.4k at the moment, retested as you can see here. But what we want to see is price moving into the volume area, close a candle, retest the value area low, and that then increases the probabilities to move to the point of control and more bullish scenarios. We have some news today, so please be aware. Friday, June 28th, 2:30 p.m. Central European Time, high impact news might increase the volatility on the chart, so make sure you trade safe around that hour. And if we then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario shown, either or. We don't really yet talk about a bear market, because for that to happen, we need significant moves towards the downside. And on the daily time frame, I covered many different scenarios, and here are the probabilities. The flat is not valid, triangle low, bullish scenario low, WXY is medium, moving above 66.4k before taking out the low, increases the probabilities for the WXY, and currently the ABC zigzag is the highest probability move. Extra information that is good to know is that we are currently below the value area low of the volume profile of this range, which is a sign of weakness. You have to get back in the range volume profile, retest the value area low for a sign of strength. Testing the weekly gap now for the second time as shown. That slightly increases the probabilities to fill the gap, and we are entering the weekly channel as shown as well. We don't yet have a candle close because that would be this week, so by the end of Sunday, but it is good to be aware of what is happening with that channel. That being said, I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.